Smith, and very excited to have you here. I tell you, we are having so much fun with these virtual town hall meetings. This is entitled COVID-19 Stimulus Checks and Taxes. Come on, somebody. And so listen, I want you to get excited, get your pen, your paper. It's going to be very engaging. Our special guest is a phenomenal lady, Mary Nicole Douglas, who has such an amazing story, of really triumph, perseverance, and victory. And she'll share more of her story, but you can find her at I knew I was going to do that, right? M for Mary, N for Nicole, D for Douglas, accounting.com. So get ready, because here's the thing, and thank you for you see the website, go check her out. Just really phenomenal. She, has a phenomenal experience in corporate America, and left corporate America in 2014 to, start her own. And now she's just liberating. She's really got to focus on helping individuals, follow their passions and really be financially free. And so I'm very excited to have her here. And Tony Jackson, as you know, is my co-host, and there's Mary right there, and she's our special guest. I tell you, our director of technology, Chris Jackson, is amazing. This guy didn't even know he had that particular slide, but that's how he rolls. So with that being said, I'd like for you to understand that this is your opportunity to, learn some information, to get some answers. So if you have any questions, any feedback, we want this to be engaging. And so we invite you to go ahead and, type in the chat box any questions you have, any feedback. And right now, as we're about to get into it, you might even want to, do a, what they call it, a watch party, right? This technology is amazing. And so you can, let your other friends, your family members know, because it's so important right now with all that's going on in our global society with COVID-19, we must share information. And that's what we're doing in these virtual town hall meetings. So again, if you want to share anything, you can go ahead and, type in the chat box at any time. Love to see who's on. So you can, post your name, give a shout out. We'd like to know where you're watching from, because it's very important that we understand that together we stand and we will grow through this. So with that being said, I'd like to now bring up my colleague, Tony Jackson, onto the screen and see how he's doing. So Tony, welcome.
Hey, Marlon, how you doing?
Man, I'm doing wonderful, man. Man, you looking like the Godfather, brother. I mean, you know what I'm saying?
Hey, listen.
Hey, Marlon Brando was the Godfather, but I don't know. Tony Jackson might be the Godfather.
Hey, come on now, the Godfather. We are the real money coach, right?
That's right. Man, you look good, man. You look really good. Yeah, glad you're here, man. I mean, and I know this is your, with your success, in accounting, and got an academic scholarship to go to college on an accounting scholarship.
Yeah,
man, I know what we're going to be talking about tonight is really going to just, I know it's percolating right now with you.
Oh man, this is my thing, man. And our guest, Nicole, she's been involved in NABA, and she didn't know I had the accounting background. That's new to her. So, but we're really excited about tonight. We're really excited about sharing some information with everyone. And Marlon, we know that there's a lot going on. There's a lot going on. 80 million stimulus checks were issued this week.
Wow.
80 million stimulus checks. I know several people that got their deposits for their stimulus money. And so it's really a great time, to have the discussion that we're going to have tonight. Our emphasis is really going to be about taxes, right? Mm-hmm. And so I remember, being an accounting major growing up, they said, you got to do two things in life. You got to pay taxes and die. And Woo! So, we can help you with both of those situations. Okay. Come on, somebody. So we're really excited about having Nicole on with us and sharing some of her knowledge and expertise.
Sure.
And so we'll tell you a little bit more about her when we bring her on. And so just really, really excited. Have a great day. We watched you today with Commissioner Leaks, the Small Business Consortium.
Yes.
Some great information. So, thank you for getting that information out.
Yeah, thank you, man. And just with that, I mean, Fred from the Office of Economic Development, and then we had oh my goodness, Timothy. Yeah, Timothy from the county manager's office. And, again, for those that are listening, please understand that there are packages, there's loans, that the county just announced. And I just want to give a plug because, we need to be active. We got to take the initiative, be proactive. And I know even tonight, Mary Nicole Douglas will be sharing the information, but also really encouraging us to take action. So yeah, thanks a lot, Tony. I appreciate that. I just want to, again, I think the more we can just share this information so that people are not lost. And also, I'll just say this and turn it back over to you. Please, go to www.smallbizconsortium.com. That is Commissioner Velma Leake's Small Business Consortium website. And there you'll find a whole slew of different resources, COVID-19 related. So thanks, Tony.
Yeah. And I just want to say this too, because of course, that's here in Charlotte and Mecklenburg County. But, no matter where you live, because of course we have people watching this, we have people all over the United States. So, in matter of fact, if you're on there, just put in your chat what city you might be watching from so we know where you're at. But in your local county, your local city, there are resources available. And you just kind of have to seek those things out. We're doing the best we can at bringing those resources right to you. So you don't have to search. But if you're someplace, whether like say it's Michigan or whether you're in Illinois or Georgia or wherever, California, wherever you may be from, just make sure you seek out those resources.
Yeah.
For you. And
I was going to say, and that's a good point, Tony, even for our viewers, go ahead and follow this page, right? Like it, but also follow it so that you'll be notified when we have maybe an impromptu, speaker or guest, because as Tony said, we're doing our best to stay on top of this thing. Things are moving so fast, and it's just so important. So go ahead and, just click the follow button right now, at The Real Money Coach, because, this is where we share information.
Yeah. And so as you're watching tonight, just make sure that you put in your comments. We want to hear from you. We want to hear your questions. Hit those hearts, hit those thumbs up signs on your Facebook, send all that up in the atmosphere. Like Marlon said, like our page, and we're going to continue to bring you the very best content that we can. And we're going to continue to bring experts like we had Michael Harding and talking about the indexing, Michelle Mitchell last week talking about the loans, the SBA loans, and who qualifies and the process of doing that. And so, so we want to thank you, LaPronda. It's great to have you with us. And so we want to just make sure that we continue to bring you those things and bring you the best experts that we can find in the business. So, Michael Smith, thank you. And so, so it's great to have you folks with us. And so, Marlon, as you mentioned, my background is accounting. I went to Western Michigan University, an accounting degree, right? And so I have an affinity for accountants. I have an affinity for people who work with numbers. And we were talking about the different loans and stuff, and we're talking about the stimulus program and all those things. Well, guess what? We're talking about taxes tonight, and your tax dollars are the things that pay for those. And so if you want to return on your tax dollars, then you have to take advantage of those things.
Right.
And so really my intent tonight is it's kind of to prime the pump, if you will. So I want to kind of just talk a little bit about taxes on a very broad scale. And then what we're going to do is we're going to bring in our expert, and she's going to come in and she's going to be able to really drill down and tell us about some of the tax treatments and some of those types of things, because I love it, but I'm not close to it as I was. I'm close to it, from the standpoint of the things that we do to help people accumulate legacy wealth, be able to pass that on, retirement planning. But really, we want her to kind of just get into some of the details and just let people know. And I have a few questions for her myself. Okay.
Wow.
I got a few questions myself. And so that's what we're going to do tonight. And so with that, let's just recap real quick the CARES Act. And there's really, and Chris can pull that up, there's really 6 things that are in this CARES Act. There was the federal assistance for companies and counties and big business, right? $500 million. And then economic support for small businesses. Now we're hearing today, even on the news, that a lot of those funds have been used up for the payroll protection program. And we know that they went back to Congress and asked for another $500 billion for funding. And then we know there's various tax incentives that are a part of it, $300 billion in tax incentives. A couple things that come to mind that we can ask Nicole about when she comes on is being able to take out of your 401k and be able to spread those taxes over 3 years versus paying it all up front. The suspension of the 72.5 rule, otherwise known as RMDs, required minimum distribution. And then the stimulus check. We just talked about that, where there was 80 million stimulus checks issued direct deposit. We know in excess of that this week, people have gotten that money. And I get a lot of questions. Do I have to report this on taxes? Do I have to report this as a federal tax when next year rolls around? And so, my thing is, well, if you do, does that mean you're going to turn down the $1,200? Yeah, probably not. So we're going to just deal with that. And then also there's a couple other things like the expansion of unemployment benefits, adding $600 to the normal $300 in for the 13 weeks and all those types of things. And what does that mean? Is that taxable? Is that taxable unemployment benefit? So these are some of the questions that we can pose to Nicole when she comes on, and just get some answers or some directions and that type of thing. And certainly we know this. Certainly we know that we won't be able to answer every question tonight. We won't be able to answer everything. But for those of you who type in our chat box, we're going to do our best to answer some of your questions the best we can. In addition to that, we have a new feature that we're introducing on the Real Money Coach. So some of you may not be comfortable typing in the chat box. Maybe you're watching us through our website, therealmoneycoach.com. Well, guess what? Tonight, we're going to introduce a call-in number. And so if you want to call in with a question, that number is going to be there. It's on the screen, 704-800-5725 is a call-in number. So you can call in, ask your questions, and we're going to put this technology to work, and we're going to answer some of those questions for you. So that's what we're going to do tonight. So I want to introduce really this concept of there's 3 buckets of money when it comes to particularly retirement. There's 3 buckets of money, okay? And those 3 buckets of money is a taxable bucket, a tax-deferred bucket, and a tax-free bucket. And when we're doing these live meetings and we're having these great discussions, we'll ask people which of those buckets would be better. And matter of fact, what we're going to do right now is I want everyone to type in your chat box or what have you, and tell us which of those 3 buckets do you feel is the best bucket? A taxable bucket, a tax deferred bucket, or a tax-free bucket? And so it'll be interesting to hear what you have to say. Taxable, tax deferred, or tax-free. All right. So here's the deal. So a taxable bucket is money that is already that is being taxed, for income taxes. A tax deferred bucket, Adrian says tax-free. And so a tax deferred bucket, all right, Beatrice says tax-free. Okay, so we're getting a lot of votes for tax-free. Dr. Bonita Harris says tax-free. All right, here we go. I haven't seen anything but tax-free yet. So everybody is saying tax-free. Well, here's Brad Hudson says tax-free. Miss Yolanda Harris says tax-free. So we agree with you. Susan Brady says tax-free. Thank you, guys. So here's the issue. All of us are saying the tax-free bucket is the best bucket, but the majority of our retirement, certainly the majority of our wealth, most of it is in tax-deferred buckets. All right. So tax-deferred bucket. And so what happens is we put our money through tax qualified plans like a 401k, IRA, 403b. If you're self-employed, you might have a KEO, you might have a SEP, and those types of things. And it goes in the tax deferred bucket. And it actually grows in the tax deferred bucket. But when it's time to pull it out, it all comes out of the taxable bucket, even the principal that you put in. And so when we bring that slide up and we take a look at it, the problem is that it never hits the tax-free bucket. So it starts off as tax deferred, grows tax deferred, and we like that. But when it comes out taxable, never hitting the tax-free bucket. And so what we teach is that there ought to be at least some of your funds, some of your retirement, some of your wealth ought to be sitting in a tax-free bucket. And so often we hear about diversifying your investments, having different types of investments, and usually when we're talking about that, you ought to have some cash investments. You have to have some things that are high risk, some things that maybe are low risk. But what we're talking about is you also need to diversify in terms of taxable, the tax treatment. And so we use the analogy of this. Let's say you have a $20,000 seed, and that seed grows to 200,000. The question simply is, would you rather pay taxes on the seed, the 20,000, or pay taxes on the harvest, the 200,000? And I think most of us would agree that we'd rather pay taxes on 20,000 rather than paying it on 200,000. And so really that's what we teach, is to let some of that happen. Okay. And so again, it's about balance. It's about having some diversity there. So now let's take a look at the next slide, and I'll tell you a reason why many people feel that, at some point taxes are probably going to go up. Many people are saying that, taxes are really low compared to where they have been in the past. And so the dollar that you see on your screen right now represents a tax revenue dollar that comes in. And this is from the Government Accountability Office. And basically 28% goes to Social Security of every tax dollar. 28% goes to interest. 21% goes to Medicare. And 15% goes to Medicaid. And then 8% goes to everything else that we talk about. And so really 92% of every tax dollar goes to those four programs. Now, it is my opinion that those four programs really aren't going anywhere. Social Security, they're not going to get rid of Social Security. Now, we know this. We know that the Social Security Trust Fund has some issues. And when you think about it, even today, there's even greater concern because you have 16 million people who apply for unemployment. That means there's 16 million people that are not paying into the Social Security Trust Fund right now. And then you compound that with the fact that if I'm eligible to receive Social Security, but I haven't been receiving it, and now I'm not working, I might just go ahead and start getting my Social Security early. So you may have more people going and receiving Social Security, less people paying in. So that certainly puts a strain on the Social Security Trust Fund. Now, we know the interest on our national debt. We have to pay that. And I encourage you to look this up. You look up usdebtcalculator.com, usdebtcalculator.com, and you can see how our debt is growing as a nation very fast. So we don't think the interest on the debt is going anywhere. Certainly Medicare, Medicaid is not going anywhere. And so if 92% of all tax dollars are going to these four programs, then at some point there has to be something done differently. And which brings us to the next slide I wanted to show you. This is really quite something. According to American Tax Planning Institute, for most people, the biggest threat to their financial security is taxes. And the chart that we're looking at here is looking, the black line is really going with the tax rates in 1950. The tax rates in 1950. And as we can see, when you were lower income, you paid a lower amount. And then the higher your income, the more you paid in taxes. Versus looking at the last tax bill that was passed in terms of 2018, and now we're in 2020, you can see that taxes were actually lower as a percentage in 1950 than they are today. And when you look at the top end of the income bracket, really we are at a 70-year low in taxes. And so if we know taxes are lower today than they were, then why wouldn't we take advantage of perhaps paying the taxes at a low rate today versus what we don't know is going to happen in the future? And so that's really one of the things that we want to emphasize here is that taxes are low today. We know what they are. So for a certain amount of your portfolio or your wealth, we should at least maybe pay the taxes today in order to have it tax-free later on. And then the last thing I want to share before we take just a real short break, maybe 25-second break here, and then we'll come back and introduce our guest speaker, is we call it the smart money rules. I called it that, right? The smart money rules, right? So smart money rules says this: there's no market risk, right? Most people say that you got to risk money in order to make money. And we talked a little about that on the first town hall, utilizing fixed index strategies to eliminate market risk. And so we're talking no market risk. So smart money rules, there's no 59.5 rule. Now the 59.5 rule says this: if you take money out of your tax qualified plan prior to 59.5, not only do you pay ordinary income taxes, but you also pay a 10% penalty. Now we know there's a couple rules around that, but generally speaking, you're going to pay taxes plus you're going to pay the penalty. And that's why if your cousin or someone takes money out of their retirement plan, perhaps you've done it yourself, you left a job and you had a 401k and you decided that you were going to take your money. And when you got the check, it was, 30-40% was taken out for taxes. And that's because of the penalties and also paying ordinary income tax. And we know that part of the CARES Act, there's some relief on that. And perhaps we'll talk a little bit about that when we bring Nicole on. And then there's no 72.5 rule. A lot of people don't realize that there's a 72.5 rule. 72.5 rule says this: 72.5 rule says that in the tax year that you turn 72.5, you have to begin taking money out of your qualified retirement plan. If you don't, there's a 50% penalty. So for example, if according to the calculations for the RMD, which stands for required minimum distribution, let's say that calculation for you says you're supposed to take out $10,000 and you choose not to, then you receive a $5,000 tax bill for not taking the money out of your retirement plan. And I've had clients come to me before and say, wow, I got this tax bill. I didn't know, I didn't expect it. And it turns out that they had a retirement plan. They didn't take the money out. And sometimes it's when they've inherited a tax qualified plan from a non-spouse relative, maybe a parent or someone like that, and so they end up being thrust into that rule and not know it. So, and then ultimately what we want to do is help people pay no income tax. And so there's a lot of different strategies for doing that. One book I'd recommend is a book called The Power of Zero by David McKnight. And really our objective is to help people get to a 0% tax bracket in retirement. And so can you imagine what that would do for you if you were at a 0% tax bracket in retirement? And so those are some of the strategies that we like to share with people. There's various different products and different strategies to do that. But those are some of the things that we like to share. And so what we're going to do right now is we're going to take a short 25-second break. And then when we come back, Marlon, you and I, we can introduce our guest.
All right, let's get this back on. Wow, man, people are really just blowing up this chat. LaPronda wanted to know what's the name of that book? The Power of
Zero. The Power of Zero by David McKnight. The Power of Zero. It's an awesome read. When I met David and I went through his presentation, I was like, wow, this is the same stuff I've been telling people. So it's really great, but he really breaks it down. David McKnight, The Power of Zero. Excellent read for, and it's a pretty short read. And it really just talks about the strategy to retire in a 0% tax bracket. So
awesome.
Another one that I'd recommend, it's an older book. It's by Patrick Kelly, and that book is called Tax-Free Retirement. Tax-Free Retirement by Patrick Kelly. He wrote a follow-up to it called The Miracle Retirement. But if you go back and you read Tax-Free Retirement, it's a great book that talks about how to, again, pay zero taxes in retirement.
Wow, that's powerful. Thank you. And again, if there's any questions that you do have, please feel free to post them. We can see them real time. And I want to say a shout out to my cousin, Dr. Smith up in Jersey. Good to see you here, young lady. And, hope all is well with you and you're safe. But, and all of those individuals talking about tax-free, it's one thing to, know something. It's another thing to act on what you know. And that's what we're going to be doing right now. And telling a warm introduction of, Mary Nicole, because she's phenomenal. I know that, you've had some time with her and meetings and you've been very impressed, and that's beautiful that, we are doing our best to bring the best to,
Absolutely.
People through these virtual town hall meetings. So I'm going to turn it over to you, Tony, and you do your thing.
Yeah, you're absolutely right, Marlon, is that we're selective about who we bring on. Yeah. Because, of course, we want this to be a great resource for our audience, really. And I'm amazed at how many people are tuning in. So kudos to everyone who's tuning in, whether you're tuning in from the park or whether you're tuning in from one of the other churches or something like that. Yes, so we're really glad to hear. Go ahead, Marlon.
And let me just say one thing, Tony, and you see Susan Brady say she certainly is phenomenal. Come on, somebody, okay? All right. But and she is. But here's what I would like everybody to do. Consider this, because again, it's one thing for you to get the information. I would encourage you right now to hit the share button, on your Facebook Live, on that page. Hit the share button, and then you can. I think there's another button that says Watch Party. I think it's called Watch Party. So that now your friends, your family, they can also get this information. So you want to go ahead right now, hit the share button, on your computer, and then hit Watch Party. So that now, you will stream on your Facebook page, because when we bring Nicole up, we want as many people to hear this message. This is really prime. So again, I would say, follow our page so you can be notified of upcoming events. And at the same time, go ahead and hit the share button, okay? So that you can go ahead and then hit Watch Party. And it's just 2 clicks. And now all of your family, your friends will be able to hear directly from this young lady. So I'll turn it over to you, Tony.
Awesome. So I have the pleasure of introducing Mary Nicole Douglas. Now, I initially met Mary a few years ago at Joe Dudley's birthday celebration. It was his 80th birthday celebration up in Winston-Salem, and they had they had a whole program over a whole weekend, and I met Mary there. She goes by Nicole, so I met Nicole there, and then I later saw her a couple times at the Power Networking Conference with my mentor, Marlon's mentor, Dr. George Frazier. And so I've been impressed by her professionalism. And then lo and behold, her and I have a mutual client. And so last year we ended up, really kind of getting to know each other a little bit better and working with that mutual client. And I was so impressed because of how thorough she was at making sure that everything was done correctly and that there was no no I's that weren't dotted, no T's that weren't crossed. And so Mary Douglas has been in business, I think, for 14 years, or as at least has been working in the accounting area for 14 years. She is originally from Buffalo, New York. She has an office here in Charlotte, one in Buffalo, New York. And again, her name of her business is MND, Mary Nicole Douglas Accounting. And Mary is a graduate of North Carolina A&T University. Go Aggies. She has spent time working with Price Waterhouse. She has worked in many different areas in terms of as a senior tax accountant for Fortune 500 companies, including Bank of America. And she's just been on her own business, and she's doing phenomenal work. She's a member of NABA, National Association of Black Accountants, which I was a member of. On their resume and their bio. And so we want to bring into the show Miss Mary Nicole. I would say Mary. I want to bring in Mary Nicole Douglas. Hey, Nicole, how are you?
Hey, I'm good. How are you?
See, look at her, y'all. She got the Aggie hat on.
That's right. That's right. Listen, I haven't been to hairdresser in over a month.
Well, hey, we're living that quarantine, that stay-at-home lifestyle, right?
That's right.
That's what we're doing. So I just want you to do one thing for us. I just want you to do one thing for me, for all our Aggie people out there. Can I hear you say Aggie Pride?
Aggie Pride?
All right. Okay. We'll do your A- on that one. All right.
Okay.
I'll take in the room. Aggie Pride. So love it. So, Mary, how are you doing?
I am doing. So my unofficial tax deadline was yesterday, but we have been extended to July. So I'm tired.
But I know it's busy season for you. Probably, I would guess that if the tax season had been extended, you probably wouldn't even have time to be doing this right now.
Listen,
so I appreciate you.
We'd be doing a lot of extensions right now.
Yeah, so I appreciate you taking time out to come and share with us and share your expertise. As I look at your bio, I saw things there I didn't know. The Price Waterhouse. Now, it was so long ago that I was in accounting. It was the big 8, right? So it was Cooper's, Price, Ernst & Young, and that combined to about four different firms now.
Tony, you're old, because when I started, it was the big 4.
I know. I've been around for a little while.
8.
What's that?
I don't remember big 8.
Yeah, I know. I dated myself with that, but there's some people out there listening. They know what I'm talking about, right? So Nicole, what I really want to do is I really want to get into some of the tax consequences of some of the things that we're seeing.
Okay.
One of the things I've had several of my clients have either emailed me or text me and say, "Hey, I'm getting this $1,200 stimulus check. Real happy about it, but am I gonna have to report that on my taxes?"
So that is not going to be included in taxable income on your 2020 tax return. It is really free money. So it will not be included on your taxes, and you don't have to pay any taxes on that money.
So I love those 2 words that you put together. Free money. We like free money. So they don't have to report that on the taxes. Now, what about on a state level? Maybe North Carolina, South Carolina, maybe some of the other states. Are any of the states going to require that to be income that we know of?
No, it will not be. And if it's not taxed at a federal level, it won't be taxed at the state level either for the stimulus. And a lot of state tax returns start with federal adjusted gross income. And since it will not be included in that, it's not included on the state either.
Okay. So that's wonderful.
Yeah.
That's wonderful news. Now, the other question is, what about unemployment benefits? And we know that there's extra $600. And I think it's available for 13 weeks. What about taxes on that?
So unemployment is taxable. It's taxable even if it wasn't the virus, and it's still taxable, whether it be the, North Carolina's max is $350. unfortunately. So whether it be the 350 or the 600, it's all taxable. So it does have to be picked up. Now, when people apply, they do ask you, do you want to pay your taxes now and get the withholding taken out, or you don't? So I always talk about now or later. So either you pay the taxes now or you pay the taxes later.
So but you're gonna pay taxes.
You're gonna pay the taxes on it regardless.
Right. Now or later.
Now or later. Now or later. So, I tell people I suggest going ahead and paying now, but because of the crisis and everything going on, they might need all of the funds now. So they can go ahead and take it now, especially since their income for this period of time is lowered. So their taxable income will be lower for the year, possibly.
Okay, so that could be good news for a lot of people. One of the silver linings is that I might be at a lower income tax bracket because of what's going on right now.
Correct. That's
okay.
Correct.
Now, one of the things that I always talk about, and it comes up a lot, is the RMDs, required minimum deduction. We know the Secure Act back in September, whenever it was passed, raised the age from 70 and a half to 72 and a half. And so there is an option for people to not take their required minimum deduction. I guess really my question is, I found that a lot of my senior clients ended up owing taxes because of the new tax bill in 2018. And, and a lot of them said, well, do I have to take this RMD? I don't want to take it. I don't need the money, which is a great position to be in. So what advice would you give our seniors who ended up owing taxes either in 2019, 2018? What would you recommend for them?
So the thing is, the required minimum distribution can be, the thing is, it's added to income. So if I'm already, because I do have clients that make more in retirement than they did when they were working because of the way they saved and invested. So they're already at a higher taxable income. They're at a higher tax rate. And so they don't want to add to it because that's more taxes they have to pay. So the reality is, if you're already making, let's say your taxable income is 100 and they're making you take a required minimum distribution of another 10, that's making your income $10,000 more. And so some of them just like, can I just not take it? I don't need it. I don't want to take it, leave it in there. But the rules say you have to. So great news that they won't have to for 2020 because of what's going on. Another reason why it's good that they don't is because a lot of the money that is invested in stock. So they will be taking it out and incurring such a loss because stocks have dropped.
Yeah.
So,
right. Absolutely. So, and what's interesting is I'm glad that you have clients, and that's really helpful and hopeful and gives us all hope, right? Because there's many of us that would love to be in a higher income in retirement than we are when we're working.
Right.
And a lot of times what we've bought into in the past is that, put all this money in these tax deferred vehicles. And because when you retire, you're going to be in a lower tax bracket. But what we know happens is when you retire, there's a couple things. And you can speak to these things. One is, what about your personal deductions for like your minor children and all those type of things? I mean, I'm hoping that when I retire, that I'm not carrying no dependents, right? I hope my dependents can be carrying me. Come on, all right.
Or at least carrying themselves.
So you don't have the dependents, and we know that in this last tax bill, 2018, that a lot of people who were itemizing before no longer can itemize. And sometimes that can have an impact on your taxes. And so there's a lot of different things that can happen that may not necessarily put us in a lower tax bracket in retirement as we thought we might have been.
Right. So my answer to your question, when you asked that question about tax deferred, tax free, and there was another one, was it depends. And so, no one situation can be the answer for all. And it just really depends. Like, What are your goals for when you retire, and where do you see yourself being? And it's very different with my clients, because I'm never going to tell you to make less money. I'm always going to tell you to try to make more money. So we have to think about what's going to happen when you retire, because my goal is that you have a lot of money when you retire.
Right.
And so, you know, that's something to think about, but it also comes with creating a strategy and a plan for what you want when you retire. You know, so my mom is actually Susan Brady. Shout out to Susan Brady. And she's graduating. She's retiring in January. And so, you know, my sisters and I have been working with her on what her strategies is going to be, what her plan is going to be. And when you have a strategy and a plan, you can make adjustments. So because of what's going on with the economy, we won't be taking that, you know, some of that retirement out. We're leaving it in there so that it can grow back, you know, and she's in a position where she won't need it. So you have to have a team. You have to have a relationship. And so, you know, that you can make adjustments as needed, and you know what you're planning for.
That's a great point, because what I always tell people is that you do need a team. You do need a team, and part of that team needs to be someone who's versed in taxes. We need someone who can help you with wills and trusts, certain insurance, retirement stuff, stockbroker. So it takes a real team to really do the planning quite well, because each of us have a piece of that.
Right.
But
It's essential.
You got to look at the whole thing.
And then I want to go back to something you said about standard deduction versus itemized deduction. So it is true that in 2018, they changed the way that they increased the standard deduction, and they took away personal exemptions. And so although some people, so you still have the choice. You can itemize or you can use standard deduction. We're always going to choose whichever one is going to lower your taxable income the most. So now for a married person, itemized deductions went to $24,400 for 2019. So if your itemized deductions, because you have a house and all that kind, you get the mortgage insurance, you get the real estate taxes. If that only came up to 20,000, that's nice, but I'm using that 24.4. So it's not that they took it away. It's just that they gave you an opportunity, honestly, to lower your taxable income more.
Okay. So I think sometimes too, we have to get to the point where we realize that if we're let's say it this way, you can't wait until time to file your taxes to tax plan, right? And so, you know, so you need to do that ahead of time, working with a professional like yourself, so that when that time comes, because ultimately what we want to do is we don't want to owe IRS nothing, and we don't want the IRS to owe us anything. We ultimately want to break even.
Right. So it's key what you said. It's about relationship, right? And it's having that relationship already in place. So my clients, when this whole virus came about, my clients have a relationship with me already. So one, I can speak to what was needed very quickly. You need to do this. You're going to have to do this. You need to do this. No, don't take that loan. You need to do this. So that was easy because we already had a relationship. I already knew what to tell them. I already knew how to guide them. Right. So it was very easy for them to get in touch with me. It was very easy for me to make a decision, or help them make a decision on the steps they needed to take, and give different solutions to what they were experiencing. Now, when new people are contacting me, one, I'm already busy because it's tax season, and then my clients come first. So I am able to help new people. However, it's just not the same priority because we don't have that relationship yet. So then I have to figure out what's going on with you and how can I help you, because I don't even know you yet. I don't know your situation. I don't know what's going on with your business. And unfortunately, because of some of the requirements that are needed for the people that are self-employed, that didn't have any bookkeeping, that didn't have their taxes completed, they unfortunately are losing out on money because they weren't ready.
Okay, great. And so, you know, it's kind of like what we tell people, a couple things, like, you know, when I was an agent, I did homeowners insurance and car insurance. It's like, you know, if you come home and your house is on fire, it's too late to buy the insurance. You know, and so it's just a matter of proper planning, right? Proper planning prevents poor performance, right? So
we have a lot of poor performance going on right now. A lot.
A lot of poor performance.
A lot. And, you know, Today, it was hard for me to hold my tongue because unfortunately, this is a very unfortunate situation for everyone. But if you did not prepare in any kind of way, because we always talk about that emergency fund, this is the emergency.
Yes.
This is the emergency. And so if you did not save any money, you're feeling a little worrisome right now.
Yeah, you're feeling a certain kind of way.
Feeling a certain kind of way right now. You're probably one of the people that's calling me going crazy about the stimulus check.
Right. Exactly. Exactly. So that's great information. Now you mentioned a little bit about the stimulus checks, and then we also know there's SBA programs. There was disaster relief. We know the payroll protection program, which is out of money. I know that we have pastors on the phone. We have nonprofits. We got small businesses. We have some joint clients on here that are independent contractors and that type of thing. So if I get that 10 grand, right? If that comes to me, is that going to be reportable income? What happens from a tax standpoint? Do we know with that?
Okay, so let's talk about that $10,000 for a minute. So the $10,000 loan could be forgivable if you use it for payroll, rent utilities at the 25%, 75% for the payroll. Now, at first, when it first came out, it was, now you have to remember that everything is happening real time. Things are changing hourly. It's just everything's real time. So at first it was get this $10,000 forgivable loan. Okay, so of course everyone's applying. We're going to get this $10,000. You really don't have to do anything to qualify, really. And then it became, okay, we're going to give you $1,000 per employee. So then that knocks out everybody that doesn't have employees, right? And it creates a different kind of situation. They also said you're going to get in 3 days. Well, I don't know. I know one person that's received funds from that. So these programs are out there, but like you said, PPP is out of money. We don't know at this point if the people who are already in line designated. So you had to fill out an application. And on that application, it is the loan amount is on there. So when they say it's out of money, I don't know if it includes the people who were already in process. Does it include the people that were already approved? So there's a lot we just don't know. But there were a lot of people already in the pipeline, and everybody's kind of clueless as to. Again, I know one person who's gotten the PPP, but other people are approved and other people are in the process. So I don't know if they're counted in. The funds that were used or not. So there's a lot we just don't know. And unfortunately, the lenders don't really know a lot either. They're experiencing the changes just like us. And so it's just a lot right now. I would tell everybody, don't bank on that money. Do not bank on the money. You may get it, may not. It's maybe money.
Don't go out and pre-spend that money.
Yeah.
Well,
Yeah.
and then, generally speaking, when it's a loan, generally speaking, if you borrow money, that's not a taxable transaction.
Right.
But if the loan is forgiven, then does that now become income?
I am not sure yet. So I don't know if they're going to look at this as a grant. Even it started out as a loan, but then if it's forgiven, is it a grant? Because a loan is not taxable income. The loan is not income at all. So it just depends on how it's going to be classified. So it could be that if it's forgiven, it's included in income, or it could not. So we still don't have guidance on that piece totally yet. So it could be. The loan is definitely not income. So
I always tell people this: you plan for the worst and hope for the best. So if I got a $10,000 loan and it was forgivable, I might just plan to pay taxes on that. And then if I don't have to pay for it, then yay, you kind of plan for the worst and hope for the best in terms of
exactly.
so, okay, great. Now, one of the things we want to talk about, there's been a lot said about this is a great time because tax rates are relatively low. You may be in a lower income bracket because of being out of work. This is a great time to maybe do some conversions of maybe your 401k and IRA and converting them over into Roths. or using those funds to get into something that's going to be a tax-free benefit later on. Do you know anything about that? What's your thoughts there?
Well, so definitely what I've been saying is we have to leverage this virus situation as a way to get ahead, because there are several ways that you can get ahead during this time. As far as converting it over to Roth, if you're going to have lower income, then that definitely may be an avenue for you to get some money over, pay a lower tax rate on it, right? Because if you have lower income for the year, then your tax rate's going to be lower, and so it would make sense to do that. It's also the time we talked about being able to take out of your 401k. So you are supposed to use this money for help during this virus time, right? It's some people that have a lot of money in 401k. You can take up to $100,000 out penalty free and can pay the taxes back over 3 years. So if you had a team and you had some plans in place and you wanted to do certain things during this time to buy assets and get ahead, it would be a good time to do that.
Now,
They're very loose about what you're using it for. So
here's the thing that I think is so important if you're considering doing that. Number one is you got to know that you qualify, because typical rules were, 50,000 out of the 401k. You could, take $50,000 as a loan from your employer, those type of things. And in order to avoid that penalty, you have to have had a diagnosis of corona or a spouse, or you have to prove that the corona situation has had some impact on you in order to avoid the 10% penalty. Everyone just can't line up and get the 10% penalty waived. The other thing is, I think, and maybe you could speak to this, if you're doing that and you still know you got to pay the taxes, right? Because you can't avoid the taxes. Even if you can avoid the 10% penalty, you still got to pay the taxes.
Right. So everybody at this point is kind of affected by corona.
Who isn't?
Everybody at this point is affected by it one way or another. So that part is kind of easy.
Yes.
The tax piece is something else. And so the deferring of the taxes, because they also, if you pay it back within 3 years, then there's no consequence at all, whether it be tax or the penalty.
Right.
So it's all about strategy.
Now, if I can spread that out over 3 years, tax year 2020, 21, and 2022, is it reported in 3 increments, or do I report it all in 2020, but just can stretch the liability of it out over 3 years?
So I believe that it's going to be spread out over the 3 years, the actual distribution piece. And that's why the taxes are going to go along with the years that it's reported in.
Okay.
So that 1099-R would have a third.
Okay. So basically what's going to happen is basically I get 33,000 1099-R this year, 33,000 next year, and 33 the following year, which actually turns out to be better for them because it'll help keep them in a lower tax bracket rather than having to report all that in 1 year and thus having a larger tax liability in spreading that over 3 years.
Exactly.
Okay.
Now, the part I don't know is if you pay it back, then I guess you can go amend those taxes.
Previous returns.
Yeah.
Okay. Yeah. Which is good for you. That's more business for you.
Yeah.
so the other
has been more business for me. I've been trying to be very sympathetic for everything going on because it is very sad. I have a sister that's a nurse practitioner, working. So it is worrisome about that. So there are definitely some negatives to this, but there are some positives as well. And you can make it positive if you.
So you can kind of take advantage of those things if you got the right people in your camp.
Exactly.
So here's the other thing that to me makes a difference, because you can choose to have those taxes withheld out of that distribution.
Yes, you can.
And but I think the best case scenario is if you don't have to do that.
Right.
Then
it defeats the purpose.
You kind of defeat the purpose.
Yeah.
The other thing that we might talk about in a future show is that, there's programs where you can get some leverage. And the one thing that we want to talk about is what you're going into. And we did a lot of talking about that, a couple of weeks ago, April 2nd. Matter of fact, if anyone wants to go back and listen to that, or even email us at info@therealmoneycoach, we can send you a shortened version of that town hall. Is you want to make sure that if you're taking the money out of an equity-based program, that you're putting it into something that's going to be equity-based, so that when the market rebounds, you rebound with it.
Right.
And so you don't want to permanently lock in a loss. So you got to be careful about what you're putting it into, and making sure you put it into something that's going to be beneficial for you.
Definitely. Can we talk about stimulus for a minute?
Let's talk about stimulus.
Okay. Because stimulus is on my mind, because it's been on everybody's mind, and they've been calling, emailing, texting.
Okay.
So everybody could not get the stimulus at one time. So just because you did not get it yesterday does not mean that you're not getting it. So we have to have a little bit of patience in this. This is all new. This is all a lot. There was no way they can give everyone stimulus at the same time. So I would suggest to people that they do not get frantic. They do not, the website that the IRS gave to update direct deposit and your address isn't working. It isn't working. So then everybody gets frantic and says, it's saying that my information isn't on there. It's saying that, it's not working. So the best thing to do right now is to just have patience. Your accountant and your tax preparers, they can't give you any answers about this. The only thing we can answer is if you're getting it yes or no based on your income on your 2018 or 2019 tax return. That's it. That's it. They will not take, the only reason a stimulus check will get taken is if you have back child support. That's the only reason. So if you owe the IRS, if you owe North Carolina, if you have collections, none of that matters. You're still going to get the stimulus check. The only time you will not get it is if you have back child support.
Okay, so back child support, and we really address that too. And I'm glad that you reiterated that, because I had questions from people who says, well, I owe the IRS money. Am I going to get my stimulus check? And I was like, yeah, you will. I mean, this is the one time that they're forgiving, and you're actually still going to get the stimulus check. You won't have to pay taxes on it. So it's a great situation. And I know we're really coming up to an hour, but there's a couple more questions I really want to address. So if you all could just be patient with us, we're going to run just a few minutes over. But I think we're getting some really good information. If you like what we're telling you, just let us know. Hit those hearts, hit the thumbs up, comment, all that type of thing. And again, remember, we may take one or two callers at 704-800-5725. So we're going to take maybe one or two callers. We want to test that system out, actually. So now, the one thing that someone asked, and this doesn't really has to do with the CARES Act, but it has more to do with the Secure Act. And what is the best strategy to decrease inherit taxes? Now, one of the things that we know is that there used to be this thing called a stretch IRA. So if I received inheritance from a non-spouse, like my parents or something, I could take that money, I could stretch it out over my lifetime, and then therefore decrease the taxes. And we know that that was eliminated with the Secure Act. And so I know my answer to that question, but I'd love to hear what you have to say about decreasing inherited tax.
Okay, so are they, what are they receiving? It depends on what funds they're receiving, because there's certain funds that are not taxable when it's inherited. So are they referring to, like if they got a stock account and the stock has, are they talking about like a stock account, or are they talking about, because we know insurance is not taxable, right? Insurance is not taxable. When I leave my kids millions of dollars, they won't pay a dime in taxes. Insurance.
So I can have $1 million life insurance policy. I can leave that to my kids, and they pay what?
Zero.
Zero taxes.
Zero taxes.
We love that, don't we?
Zero taxes. Now, when it comes to retirement income, so there might be some pension that you'll have to pay taxes on, and it depends because the employee contribution isn't taxable. So it just depends on what kind of money that you're getting. And so again, it's about that planning, right? And so you really can't, most of the time you do not know your parents or whoever's information before they die. But once they die and it becomes yours, then you have to have that planning meeting with your team to say, okay, these are the different types of funds that I have. What is the best way for me to deal with these funds to avoid as much taxes as possible? Because different investment items have different taxable situations. So it really just depends on what it is that you're getting. You don't necessarily have to cash everything right away. So let's say you inherit a stock account from a parent. It's not that you have to all of a sudden sell all of the stock. You can put it right into your portfolio, let it keep building. So you don't have to sell it right away.
Well, it's important because, again, when I talk to someone, there's really three questions I got to know. I got to know where the money come from, what do you want this money to do, and when do you want it to do it? Mm-hmm. If I don't know those three things, I really can't tell you anything without knowing that. And so, you know, if it's tax qualified money, that's going to be treated really different than if it's non-tax qualified. Matter of fact, someone put up the question about, I think it was Ms. Harris, about annuities. Same thing with annuities. Annuity can be a tax qualified plan or it could be a non-tax qualified plan. So it really depends on the source of the money. And then those other two important questions: what do you want it to do and when you want it to do it? Mm-hmm. And so those are great. Now,
so most of the time my answer for everything is that it depends, right?
Right.
It depends, like you said, where'd it come from? What do you want to do with it? You know, it depends.
Right. And then the other thing is, you know, creating, you know, when you ask what do you want it to do, is do you want it to create lifetime income, or do you want it just to be there to just grow? You know, those types of things are also very important. Where did it come from? What do you want it to do? And when do you want it to do it? And then we all got to all work together to come up with a great plan. Right. The other thing that we also see is the use of life insurance, because some things we can't avoid to pay the taxes on. Mm-hmm. But we certainly could have something like life insurance to pay out to cover the tax liability.
Mm-hmm. And so, usually whatever the vehicle is enough to cover the taxes too. So if I got pension from a parent, usually they're taking the taxes right from that. So leave me 50,000, they take the taxes, I might get 30 or whatever it is, you know. So usually there's a way to pay the taxes from whatever the investment is.
So you're not coming out of your pocket.
Exactly.
Right. And I think the other thing is too, you got to remember that some of those things can put your own income into a higher tax bracket.
Oh, for sure.
So you again, it's all about the planning.
To you, right?
Right. It's about the planning. So let me see. Any other things you want to share? Do we have any other questions out there? I know, you know, thanks Jarvis for sharing. It's great information. Nicole, you've been great. And I just want to see if there's anyone that wants to call in. Otherwise, we're going to bring Marlon back on, and we're going to just prepare to close out. And just give any parting words to you, Nicole. Anything? Why don't you tell us? Why don't you tell our viewers how they can get in touch with you if they need a tax professional and so forth?
Shout out to my sister Regina, who's listening in. I love my family. So my parting words would be to save. If you've never had a budget before, you need to get one. Once we get through this crisis, I hope and pray that people really see the importance of having a budget, of saving and getting in position, because we never know what's going to happen, but we know that something is going to happen. So everybody, this is really a time to really do some self-assessment and figure out what you need to be doing financially. When you get those stimulus checks, please use that for bills, for paying your rent, for things that will help you get ahead. Because although evictions are stayed for now, when this is over, the landlords want their money. Like it's not a game. It's not a game. So stay off online shopping. Leave Fashion Nova alone. Those are my parting words. If you need to contact me, you can reach me at info at M&D Accounting. Our number is 866-774-9447, or we do have a local line that you can text to, and that is 980-939-0939. On Facebook, we are M&D Accounting, and on Instagram, same thing, M&D Accounting. We have a Twitter too. It's all M&D Accounting.
All right. Well,
that girl was like, yo, Aggie down, okay. Accounting, come get it. Listen, y'all, I was just watching, and I'm an engineer by training, and I was looking at these two accountants. They were like, yo, let's go longer. Hey, if anybody doesn't have any other questions, we'll keep on talking. I love it. So listen, I want to say thank you. This has been phenomenal. And I want our listeners to really hear what Nicole was saying. It's all about plan. It's all about having a team. I mean, let's really break it down. It's a lot. You have the stimulus package and the CARES Act and blah, blah, blah. But the key is we're going to grow through this. See, life happens to all of us. But the question is, are you going to learn the lessons? Life is ups and downs. But you see, the beautiful thing is you have to now say to yourself, you know what? Okay. Hey, life happens. There's things outside of me, but I have to take control. And I talked to my good friend, Dr. Dennis Kimbrough, author of Think and Grow Rich, A Black Choice. If you have not read that book, I want to encourage you, use this time right now. Readers are leaders and leaders are readers. And we will have him on one of our town hall virtual meetings coming up. But I want you to understand what you put in your mind. This brother was breaking it down, and it's so amazing. We're going to have him on we have a Winning Wednesday webinar at 3 p.m. Okay. And it will be on this station as well. The Real Money Coach, 3 p.m. Mark your calendar. And what is that? That is April 22nd, I believe. And so I'm giving a shout out because as Nicole said, it's mindset, right? It is mindset. And we have to be ready because COVID-19, it just knocked us off. But what's going to be the next thing? And the question is, are you prepared? 7 P's, prior proper planning prevents pitifully poor performance. And so I have to share this because there was a lot of great information, but don't get lost in the sauce. It's time for each one of us to say, you know what, let me do some reflecting. We have a sister on here, Phyllis. Phyllis is a master in budgeting. So if you want to get some information, that's what Nicole said, get a budget. And so, info@therealmoneycoach.com. And I want to encourage you, don't let this just be, I just watched this, this town hall meeting, Facebook Live. No, let's go ahead. Contact Nicole. Send an email to info@therealmoneycoach.com so that we can share information, right? It's free. It's no obligation. But I want you to understand, what you do today will dictate where you'll be tomorrow. So I just had to jump in and just, I'll turn it back over to Tony for closing words. But this has been phenomenal. And you want to have the team. You saw Nicole, she's like, it all depends. It depends on the situation. I can't give you a blanket answer. But that's why you want to have someone like Nicole, right, on your team, M&D Accounting, because you want to have somebody who has the professionalism, has the expertise, and also has the heart. I just want to say something about Nicole. One of our clients who we've helped, and he shared with me, he said, wow, he said to me, Marlon, it's so amazing because M&D Accounting, they offered their services to help, knowing, people, my team, so on and so forth, right now we're not working. And so Nicole said, look, I will, you don't have to pay me right now. We'll get things into situation later. That shows character. And I want to say thank you, Nicole, for walking the talk. It's easy to talk, but you're walking the talk. And so I just want to say thank you, Tony, Nicole. It's been phenomenal. It makes me feel like I should go back and get my accounting degree.
Thanks for having me. I definitely want to come back.
What?
Yes, have me back.
Absolutely.
You might be a little regular, okay?
Hey, she could be our resident tax expert.
That's right. That's right.
Because we have an affinity for accountants. I mean, I'm just saying we do.
Yeah, that was news to me. I did not even know about you being an accountant. So
yeah, I got an accountant.
The secret.
Yeah, absolutely. So and you know, Marlon, you know, you're my good buddy, and you know, I don't keep score. But you know, I think I've just nailed it with the guests I've invited to the show. I'm just, you know, Nicole.
Okay. Oh, that's like a public. You know what I'm saying? He put me on blast, Nicole.
Yeah, I see. Well, who have you been inviting? You better get your invites up.
But you know, I love Marlon because he's so inspiring, though. I mean, just seriously. I mean, it's very inspiring. You know, I think you know. He inspires, I inform, but we're passionate about bringing this information to all of you. And as you can see, we're not just about what we do, but it's about what we do collectively, bringing other professionals, other experts in. And I have an accounting degree, but don't ask me anything about taxes today. My information is dated. And so it's very important that we surround ourselves with a team, just like Nicole was saying. And so we just want to keep bringing this great information to you. And again, faith without work is dead. So what we want you to do is we want you to take it. And I saw Phyllis put on, it all begins with a budget, and it does. If I sit down with you, I'm going to ask you about your budget. Do you have one? If you don't have one, you need to make one, because it all starts there. It all starts with having an idea. How can you really talk about where you want to go if you don't know where you are today? And so I think that's very appropriate and very true. And that's part of the team. So again, we thank everyone for being on tonight, and we look forward to hearing from you. Yeah. And Marlon, it's time for your signature close.
Thank you, brother.
And then thank you again, Nicole, for being with us.
Thank you for having me.
And we will certainly have you back on the show.
Okay.
And thank you for inviting your family, your mom and your sisters. So it's good. I think we're very proud of you with good reason. And, you know, shout out to my family as well. Everyone stay healthy and well. Wash your hands, keep social distance, wear a mask, do whatever it takes to stay healthy and well, because we need to hear.
And you know, one of the things I'd like to say, thank you, Tony, man, phenomenal, man, always bringing the heat, bringing the fire. And for those of you that are watching, you know, again, every Thursday, 8 p.m., you know, we did this first town hall meeting, I want to say on April 2nd, 3 weeks ago. And the responses were just so incredible. We were only going to do one, but then we said, you know what, there is an opportunity to share good information. And so I want to thank you. But again, you know, definitely follow our page, you know, and then spread the word, you know, come back next week and you know, make sure you send an email to info@therealmoneycoach. We will email you out. We have an ebook entitled Recession Proof Retirement, complimentary. It is phenomenal. I promise you, you will love it. So send an email to info@therealmoneycoach.com. And in closing, want to say thank you for your time. Time is our most precious commodity. Money comes and goes. You know, we can, you know, earn money, grow money, and it can evaporate, you know. And the thing is, and unfortunately, right now, a lot of people who had their money in the stock market were very exposed. You know, the Dow, NASDAQ, everything's gone down 24, 29%. So my point is that, you know, let's learn from this situation. Let's truly grow from it, because information is not power. Information is only power when you take action. And that's why Tony said earlier, faith and fear can't operate at the same time. So when you act, right, there's power. You're taking action. And so again, we say thank you. And in closing, I want to say, on behalf of the Real Money Coach, we appreciate you, we value you, and remember, there's greatness within you. And remember this, A vision without action is just a dream. A lot of action without a vision is merely a passing of time. But a vision with action can change the world. I am Marlon Smith. On behalf of the Real Money Coach, in partnership with my brother from another, Tony Jackson, we say thank you. And we'll see you next Thursday, 8 p.m. with another phenomenal show. Spread the word, because together we stand and we will grow through this. Stay blessed.